Hey everybody, Hans Albrecht here, your head of income trading at Option Pit. I hope you're having an awesome day. I just wanted to give you a little bit of an update on what I'm thinking about markets here. So we saw that big sell-off earlier in the week, one of the biggest momentum sell-offs we've seen in the last few years, and we rebounded back on that good CPI number again this morning. PPI a little bit on the strong side, market maybe a little bit uncomfortable with that, but I think the more dominant thing is that we kind of got near that 6100 level again and we're pulling back. So I wanted to talk a little bit about what that means. We talked about all this gamma. In a moment, I'll address that is kind of keeping us within a certain range here. So you can think of this sort of 6,000 to 6,100 range as a kind of box. And within that box, we have a lot of positive gamma. That means there are a lot of huge positions that I talked about in a couple of videos that are keeping a clamp on volatility. So we have this very big position in that JPM collar, that huge call strike. And the market, indeed, as I've been talking about for a couple of weeks now, is going to get magnetized towards that level, and it's going to move a little bit above and a little bit below, and that's exactly what we've seen this week. One or two concerning days, but I said in my video back then, I said, look, I think we're going to find some support here because of this gamma and because of this big strike. Sure enough, we got a little help from CPI, and we bounced right back, right towards that strike and went a little bit through. PPI, we're pulling back, and that 60.55 level is acting like a gigantic magnet. So the market is really just kind of trading around this level here, pivoting around 60.55. Of course, there's zero DTE. There are other positions that come into it, but this is acting as a kind of anchor for the market. So we got up towards 6,100. We got down towards 60.25, 60.30. We got up towards 6,100 again. And today, the market kind of likes it and says the volatility market is saying, okay, we've found ourselves a range, and we're probably going to stay here for a little while. So basically, unless we get below 6,000, that is going to be an alarming area to be in. So if we somehow get some sort of impetus, right? That's the way gamma works. It doesn't, in a sense, do anything on its own, but it can sort of accelerate or decelerate movement depending on what the market is, what kind of positions the dealers have on. If we can get through that 6,000 level, that's where we start to see the potential for some acceleration towards the downside. And so that's where, as an income trader, I'd be looking at something very important, which is if I'm long stocks at that point, I'm going to be looking at a little bit more aggressive call sales, for example, cover calls. I'm going to get maybe a little bit closer to the money. And the bonus is that usually when we get down, if we get down into that range, we're probably going to see a pop in volatility. So we're going to get that little bit of extra edge, right? As you guys know, I don't like selling really thin premiums. I don't feel like I'm getting compensated enough. I want to get that volatility edge when I'm selling premium. If we get below that level, we could very well see those premiums pop up a little bit, which is a positive for call sellers. So that's where we're going to take a look, start to act a little bit more defensively. So you can kind of gather that this is a strategy where you kind of pivot depending on what the market's giving you or what the stocks are giving you, and you need to have that ability to kind of stick handle the situation. So we've got a massive expiry coming up next week. That's what leads me to believe that we're just going to really probably sit around here. I think Bitcoin, as I've been saying for a couple of weeks, going to sit around 100,000. I don't think that adds any kind of fear or uncertainty to the market. Look at this expiry in December, the biggest expiry of all time in options. So massive positions, some of them that have been sitting there for a couple of years, right? Remember, December used to be a leap, right? It used to be long-term options for many people, and they've just kind of accumulated over time. That's years of being able to accumulate these very large positions, and here we are with a massive piece of gamma that you can think of, right? That's going to keep markets generally supported to the downside as well as supplied to the upside, to that 6,100 level. So the idea is that if we can get through that 6,100 level, probably after expiry, we may have the potential for another melt up beyond there. So really, that's the way you have to look at this market. Under 6,000, above 6,100, those are potential accelerant areas. Below or between those two levels, we have a market that can just kind of swing around a little bit. Now, definitely some concerns below the surface. Look at this. Been declining, more declining stocks than advancing stocks in the S&P 500 for 7 straight days. That was a couple days ago this came out. The index is less than 3% off its peak, so we're near all-time highs, and we have huge declines below the hood, right? So if you pop the hood on your car, everything might look really pretty. That car might be looking really, really good. You look below the hood, there's some weakness, right? You see some spark plugs that are gunked up, and there's some potential problems there. So we might take that as a warning that all is not well. That has happened twice before in the past 25 years, that particular scenario that I'm describing here. So look, it's a very concentrated rally. The mag stocks have gone bananas again. As I talked about in one of my newsletters in early November, I said, listen, we could get into a situation where it's all about mag again. People are rushing into the security of those balance sheet heroes, as I like to call them. Very strong balance sheets, huge cash positions. These are companies that do well no matter what, and they serve as a kind of flight to safety at times. The Apple for sure, and certainly some of those other names, except for NVIDIA, right? We've seen NVIDIA struggle as that whole semiconductor area has struggled. That's another topic to be concerned about as well, because I feel like we need NVIDIA to take part at some point if we really are going to push to those new highs. But having said that, the market has broadened out. It has done well without NVIDIA, so all is well in general. So some things to think about: less volatility over the next week. The premiums are getting very, very thin to grab from an option seller standpoint, so I'm not super convicted on getting big on that kind of trade right now. It might be just a paint dry kind of sit and watch and see kind of market. So we're going to watch very carefully for opportunities, little pullbacks on quality names, and little abilities to sell on rallies, as I mentioned in my Google video, where the skew is very, very steep. So hope you guys have a great rest of the week, and we'll see you in the next video.